Hello and welcome to another edition of PM Express, the business edition. My name is Philip Nanfuri. We're here to talk about insurance for countries, insurance against natural disasters, against outbreaks, against epidemics. We'll hear from two astute gentlemen of the African Risk Capacity Group, one on the basics of what this seeks to achieve and one on the insurance dynamics of this. But let me take your mind back a bit and then I'll fast forward and then you have a better appreciation of our discussion on PM Express, the business edition. Now, between 2014 and 2015, we had two different disasters. One on the global level, if I can call it that. You remember there was the Ebola in West Africa. Sierra Leone, Liberia, Guinea were severely affected. And fortunately, Ghana did not have any recorded case of Ebola. However, this brought significant challenges and cost the West African economy a lot. Trade was slowed, transport was slowed, because people were afraid, and a lot of things were affected, the hotel business. But at the end of it, the cost of this to the ordinary man and woman is what we are concerned about. If you look at the 2015 June 3rd flood and fire disaster, we saw again the cost of it in the country. Even besides that, all other floods that come that are severe affect the country a lot. Let's talk about droughts, because Ghana is heavily dependent on agriculture. If you look at the farming industry, anytime there's a disaster, it costs them. There's a lot of money involved that goes to repair the problem. But just like we have motor insurance for your vehicle, if there's a problem, you follow your insurer or your insurance, and then it's sorted out. So why can't African countries get something like that? Well, there is something like that, and that's what we call the African Risk Capacity. And it's basically an insurance tool used to solve problems within African countries. But it doesn't work as simply as that. Each African country that's part of it must have its own framework for trying to deal with the challenges of these natural disasters. Example, droughts, or these outbreaks. Example, Ebola. So each country has its own framework governing it. And then we sign on to the African Risk Capacity Group. They are a specialized unit that's part of the African Union. So right now there are about 33 member states of the African Union that have signed on to the African Risk Capacity. And it's into two parts. We have the African Risk Capacity in terms of the entire group, and then we have the insurance arm. They all work together. But my two guests, one is going to speak on the general aspect of it, and one is going to speak on the insurance part of it. So it's important that African countries take advantage of this, because if you look at climate change, and there are some out there that deny that climate change is really happening, African countries, we are the least polluters when it comes to the climate, but we're the ones which are most vulnerable and more susceptible to the effects of climate change in our part of the world. Why? Because our agriculture, for one, is heavily dependent on rain and not on irrigation as is practiced in other economies. There are other ramifications that come up because of the ever-changing climate and weather. So if there are problems, if there's a drought today in some part of the country, if there's a problem, for example, with our cocoa, it's going to cost us a lot to regrow these trees. So if we sign on to this African insurance, this African Risk Capacity Insurance pool, and there's a problem, we're going to get something to solve some of our problems. And that's exactly what we're going to delve into on this edition of PM Express. My first guest is Mr. Mohamed Bienvenu. He is the Director General of the African Risk Capacity and at the same time the United Nations Assistant Secretary General. Then we'll speak to Dele Babade. He is also the board chairman of the African Risk Capacity Insurance Company Limited. They are the ones actually doing the insurance of African countries. So they have a number of models, they run some numbers and they see, okay, for example, if you had a flood in your country today, how much it will cost you. And then they use that to price your premium, which you pay. And then if there's a problem, you get a claim. So we're going to hear from these two astute gentlemen on how exactly African countries, like Ghana, like Nigeria, Senegal, Togo, and the rest, can benefit and take advantage of the African Risk Capacity. It's basically an insurance pool. So they gather funds, then they reinsure or give it to a reinsurer, because the risk dealing with the country is higher than the risk dealing with motor insurance or fire insurance or any other thing. So that's exactly what it is, an insurance fund for countries in Africa to tap onto to help them in times of natural disasters, outbreaks, and epidemics. So I'll start off with my first guest, Mr. Mohamed Bienvenu. Then we'll move on to Dele Babade, and we'll get the conversation going. My name again, Philip Nanfuri, and this is PM Express, the business edition. Stay tuned. You're welcome back, and my guest is the Director General of the African Risk Capacity and the Secretary General, Assistant Secretary General of the United Nations, Mr. Mohamed Biafiki. Mohamed, thank you very much for joining us from PM Express, the Business Edition. I want to cut right straight to it. African Risk Capacity. I see you are trying to help African countries in dealing with natural disasters, outbreaks, epidemics. Ghana, for example, in 2015, you had the fire and flood disaster that claimed a lot of lives and cost us economically. Can you give us an overview of what this African Risk Capacity seeks to achieve in our part of the world?
First of all, thank you for having me. But I think, if you allow, let us go back to the genesis of African Risk Capacity. You have been noting that all over the continent, every year, as you just gave the Ghana example, we have disasters. We have drought, we have flood, we have plant diseases that come massively like armyworms, and we have fires and so on and so forth. And to date, what is happening is that when disaster occurs, what we do is that we just ask for help, the international community to come and help us to come back to our former situation. But this, number one, comes too late, and it is never enough. So imagine a family with a normal livelihood, and suddenly there is a drought, and they lose the food they have because the farms don't grow properly. And then, in order to survive, what do? They start selling their assets. They sell the animals, they sell if those animals are still alive, they sell the tools, and then next thing you hear, they are migrating into cities, and then they are trying to cross the Mediterranean. So, but moreover, the agricultural production that is done by these people, most of the time in African countries, it is estimated that 80% of the food that is consumed locally is produced also locally, even if some of it is imported. So you can see the chain of impact. People are out of their economic environment. The impact on the economy is very big. So Africa started thinking about a solution, and head of state in 2012 decided to create the African Risk Capacity. What is the objective of the African Risk Capacity? Is to help government to manage and finance disaster risks. That's the main objective. So how is it designed? The first thing African Risk Capacity is designed to do is to help countries to understand their own risk profile. For example, if you take the drought or floods, it's to help through cutting-edge technology. Today, information is there, satellite data are there. Countries to understand what is the likelihood that they can have a drought, and if there is a drought, how many people may be affected. And based on that, the country can decide and say, up to a certain number of people, I can cope with it. But if it goes above that level, I need to do something. And that's something, there are different instruments, financial instruments, to help you to do it. So ARC comes in and help you to master those tools so you can determine your risk profile. But not only that, it helps you once you have understood your risk profile and decided about your thresholds, help you to organize yourself to have a contingency plan. Because it's good to understand what is my risk, but I have also to have to be ready to respond if something happens. Now, it is also good to have that plan, but I have to be able to finance it. And that's where we started by saying, look, let's bring in insurance. And it means like Ghana now has started working with us. We went through all this process, and they have decided to select the most, I will say, risky areas in terms of drought, because we are starting first with drought, and cover those parts of the countries with an insurance. If something happens, let's say drought occurs in that region above a certain threshold, the insurance will kick. The insurance will kick and will allow to pay for a contingency plan that is now ready, because Ghana has already defined the risk profile, has already a contingency plan, and they are ready. If something happened at the end of, let's say, the agricultural season next year, the insurance will kick in and the resources will be available to finance a pre-planned contingency program.
Okay, I see African countries are the least when it comes to polluting to the global environment, but we suffer the most the effects of climate change. So it's a fantastic tool or vehicle, if I can say so. What does it take? I would assume that since you are under the African Union, a specialized unit, I'll assume that all member states are part. Is that the case?
Well, the African Risk Capacity has been established as a specialized agency of the African Union, and it is treaty-based. And since it is treaty-based, it means it has to be signed by government and ratified. So therefore, it is an open door. Anyone who is interested can come. And to date, 33 countries have signed the treaty. Okay? So therefore, we have 33 member states that can work with us without any problem. Now, but they are continuing to come. The thing is that the institution is new, and it is very difficult to build the institution at the same time to serve everybody. So that's why we are not really making too much noise, and we are trying to work progressively as we build ourselves, but we built also our program in order to help African governments. So that's where we are now presently.
Okay, you mentioned in your explanation, if there was a drought in my country, Ghana, for example, given that agriculture is critically important to our economy, one would assume that, okay, so if there's a drought and this insurance pool kicks in, how much and when should we see these funds coming? Because you made the assertion that it takes quite a long time before funds come in from international partners, donors, for example. So if something happens in Ghana today and we are part of this insurance pool, when and how much should we expect? What are the parameters used to determine how much Ghana should get? And then when this money should be made available to cut out the slowness that we've experienced in other instances?
Well, many questions. Number one of the characteristics that we wanted this mechanism to have was speed. It means at the end of, let's say, the agricultural season, if the trigger kicks in, normally the government should receive within 2 weeks the funds. Okay. That's what is planned. We have it last time in Senegal a little bit over 3 weeks, but the plan is 2 weeks. But you know, today transfer of money at international level sometimes is not easy, but the rule is 2 weeks. Now imagine that in normal situation, when disaster occurs, what happens? Governments start calling for help. The next action is donor meeting. By the time they are the donor meeting, everybody pledge. By the time the money start coming in or any help coming in, you already have 6 months passed. And just imagine that someone has his livelihood at +1. And as months goes, it starts going to 0, -1, and so on and so forth. It means that the more you wait, the more that family is poorer. Yeah. And therefore, to bring that family back to the same level of +1, you need more resources. So we have calculated that sometime, instead of at the place of $1 that is given early, you can pay more than $1,000 9 months down the road to bring back the same type of livelihood the family has. So just to tell you how speed is important, and that's why for us it is a priority that you must have your resources quickly, and it is a reason also that in ARC we introduce something we call a certificate of good standing. It means for you to be able to token insurance, you must fulfill a certain number of things. It means you have your risk profile, but you have your contingency plan that is vetted by your peer. Okay, your peers. It is among the countries, you vet yourself, and then you say, okay, we agree Ghana has a good contingency plan, this will work. And then you receive your certificate of good standing. And then based on that, if something happens, you receive the resources and you have a plan, and you plan, you will just open up the plan and then finance it.
Okay, so it's not as easy as just jumping on board, like maybe just going to a classroom or sitting inside, for example. One thing I should have asked before this, one key thing that just struck me, when we talk about insurance, if I'm going to pay my motor insurance, I pay a premium.
Yes.
And if I have a claim,
yes,
I go to the insurance and I get my claim.
Absolutely.
How does it work in this situation? Do the countries that are part of ARC contribute something? How much? When? What are the parameters of that?
Yes, actually it works like exactly as a normal insurance in that sense. It means if you want to be covered, you must have a policy and pay a premium. Okay, normally the ratio, and you asked this question before, the ratio varies between what you pay and what you get. It varies between 5 to 8 to 10 times, depending on the severity of the disaster. Okay, so but one important element I want to draw your attention to is the fact that we are working through a pooling system.
Okay.
What we try to do is to bring together and aggregate the efforts of many countries. If Ghana alone goes to the international market and want to insure itself against drought, the cost of the insurance may be like X. But if you pull together many countries, that's number one, in the same region, and then you balance that with insurances in other regions, taking into consideration that drought doesn't come in all regions at the same time, you lower the risk by diversification, and then you lower the premium. And then because also you are in a group, you have pulled a lot of countries together, you lower the reinsurance. So all that compounded comes to the lowering the premium. So there is a lot of advantage into it. First, you have a whole capacity building program for you, which is practically free, understanding your profile, building your capacity, and having the whole software at your disposal so you can connect with satellites and have the on-time data and respond to your information needs. In Ghana, for example, now, they produce a bulletin every year based on ARV. ARV is that software I was talking about. Every year they produce, every month I think they produce a bulletin, and they share that at government level. They know what is the situation, what are the risks are coming, how the climate is moving, and so on and so forth. Okay.
You mentioned drought as one that you are starting with.
Yeah.
We know in 2014, I beg your pardon, we suffered the devastating effects of Ebola. Now we see Ebola reigning its ugly head in the DR Congo. And people in Uganda and other places are taking measures to avoid it from coming into their shores. Apart from the drought, what other areas should we see the ARC moving into?
Okay.
If they're not already there?
Yes, we are already into cyclones. Okay. You know, the eastern parts of Africa, particularly Mozambique and the islands of Madagascar and Comoro and Mauritius. Okay. Seychelles is very lucky. All the time the cyclones go around Seychelles. Wow. So I don't know what miracles is that, but that's how it is happening. They are really directly touched. But all the other islands are affected. We have started working on cyclones with them, and probably this year we'll start giving the first policies. Now, then come in floods. And because of the request, we try to respond to the demand as priority comes. This year, for example, Ghana, Cote d'Ivoire, Togo, and one fourth country, I don't remember exactly, but they are going to benefit from a trial of a flood model, okay, but without a real insurance, just dry run if you want. We are going to do a dry run to test it, how it goes. We did it already in some other countries. Now we want to test it here. And if it goes well, next year we can start also offering that one. You mentioned outbreak and epidemics. It is a very important aspect of our work. In fact, our program is led by a Ghanaian in this area, a very brilliant person, Mr. Ajeko, okay, Robert. What are we doing? The Ministers of Finance told us, look, this your approach with drought is working. why don't we do it also for outbreaks like Ebola and epidemics? Particularly at that time, the World Bank was working on a huge program that is called the pandemic program. It means trying to do everything they can. So if there is a disease outbreak in a place, that disease doesn't move in another place. Then we had to figure out what can we do. Then we said, okay, what we are looking for is that there is no even one death. So therefore, we must build up a mechanism that allows government to intervene immediately when there is an outbreak. So to contain the disease, there is minimum people that are lives that are affected. So we started developing the program. The objective is exactly to enable countries, number one, to have a system that allows them to determine when it triggers, when there is an outbreak. Secondly, have a good contingency plan to respond. You know, each country has its own system. But if you take it in a very systematic way and you link it to resources, you know, then it becomes more tangible. And every actor really plays his role properly. So the idea here is therefore is to help the government to be more precise in determining when is the outbreak, and then what is the plan to respond, and then of course have the money to pay that plan. We are estimating even that if we can complete a good plan, a good mechanism like that one, the cost of intervention will be very low. Because remember, when the outbreak started in Guinea, in Ebola, the first asks from WHO was $5 million. And they had to go through the same thing, pledges, etc. By the time they came, the disease was spreading all over. And you may remember that it costed the world more than $1 billion to contain that disease. So therefore, this instrument is very important, first for lives, simply, we are human beings, but also for the economy as a whole, and reputation.
Okay, so this is PM Express, the business edition. My name is Philip Namfuri, and my guest is the Director General of the African Risk Capacity, that's ARC or ARC, and the United Nations Secretary General, Mr. Mohamed Biavigi. We've been talking about the African Risk Capacity, an insurance pool where African countries like Ghana, Nigeria, etc. can access to forestall the events of natural disasters, outbreaks, epidemics. Like we saw the Ebola, we had our own floods here in Ghana, so that they don't create a mess and cost us economically. Because you know how, for example, agriculture is really important to the Ghanaian economy. We depend on it a lot. So we're taking a quick break. When we come back, we'll have another guest and we'll delve into bigger and more issues. My name is Philip Namfuri. Welcome back from the break. This is PM Express, the business edition. My name is Philip Namfuri. And just before we went to the break, we had Mr. Mohamed Biavigi. He's the Director General of the ARC, that's the African Risk Capacity. We're talking about the dynamics and the basics of what exactly it seeks to achieve. It's going to help us a lot, especially the African nations, as we are more susceptible to the effects of climate change. But yet we're the least when it comes to polluting as compared to the superpowers and then the European nations and even America. Okay, so now we're here with Mr. Dele Babate. He's the board chairman of the African Risk Capacity Insurance Company Limited. So there's an insurance company that's actually going to be doing this, more or less getting into how exactly we can insure African countries, let me put it that way, when it comes to natural disasters, outbreaks, and epidemics. But we're going to delve into the insurance aspect of the conversation. How exactly do they arrive at premiums, if you can put it that way? Because if I'm paying my motor insurance or my life insurance, they give me a premium. I pay it, if there's a problem, I claim, and then that's that. So we'll go into a bit of that. My brother, thank you very much for joining us on PM Express. So I was talking to Mr. Biavigi about just the basis of what the ARC seeks to achieve. Now, you're here with us. You're the numbers man, the insurance. When I'm going to insure my car, I give them the value of my vehicle, and then they give me a quote or an estimate, and then I pay this on a yearly basis. On a country-wide basis, how do we achieve that? How do we get how much each country should pay?
Before we go back there, I'll just do a quick summary. I'm sure Mohamed gave you a very good background of what this thing is trying to achieve. But over and beyond what it's trying to achieve, right, which is to basically protect African farmers, African poor people from the effects of climate change, over and above what it's trying to achieve, it's also trying to do it in a clever way. Over the last 5 or so years, people have the big drive in the world is towards the United Nations Sustainable Development Goals, and everybody's saying we have to have sustainable development goals. But to do that, rather than just relying on just the public sector, or public money, or DFIs, development finance institutions, the public and the private world have to work together, right? So you have to move more towards a PPP type solution where the public and the private. So what we have here in within the context of ARC is actually that. It's that working in real life. So you have ARC agency, that is an agency of the AU, which is the public face. Yeah. And then you then have ARC Limited, the insurance company. And how does that work? So what you do is you said, look, the insurance market, right, globally and internationally, for every type of product, for every type of disaster, for every type of risk, is there and it exists, especially in Lloyd's market, Lloyd's of London, the capacity exists. Whether insurance exists there. So what do? Let's find a mechanism by which we can actually take advantage of that market that exists. So we said we're setting up an insurance company. And it's not your standard insurance company, it's a mutual insurance company which is owned by the people that it insures and which are the countries. So that's the first step. So we set up a mutual insurance company. Then we go to the next step, which is saying, and we say, what does a mutual insurance company do? It will take premiums from its members, underwrite risk, and then place most of that risk. So if we take insurance risk of, in any 1 year, let's just say hypothetically $100 million, we can place about $90 to $95 million worth of that insurance risk into the reinsurance market, and there will be a charge for that. They will charge us, the company, for insurance, a premium. Okay. And then we will obviously charge a premium plus a little bit of a spread on that to our own country. So that's the mechanism of how it works. Then the question now becomes, like as you said, you know, if you go to your insurance company, how will they'll price your risk? Yeah. But they price it based on numbers. They price it based on statistics. They price it based on what has happened before and the probabilities. So, and in that case, you know, they have numbers in terms of accidents that have happened. They look at your profile. They look at whether or not you're a young person, an older person prices better than a younger person. But in this particular case, it's weather. So what we have is essentially a proxy for most of agriculture in Africa is rain-fed rather than irrigation. So we actually have a model called the Africa Risk View, which was developed by ARC Agency. So that actually tracks, you know, the level of rainfall, and is fairly accurate as in predicting what's likely to happen. So that model is the same model that we've taken to the reinsurance markets in London. This is something which is developed by us, and they like it, and based on that, they price the risk. So that's how it happens. Okay. So just like in any other way, you have to have a scientific and mathematical way for pricing the risk, and that's how it's done. Okay.
Mr. Biavigi mentioned the payout period. I asked him, so how long does it typically take? In our part of the world, claims is always a big problem when it comes to insurance, basic insurance.
The insurance companies have a reputation. They take your premium. Exactly. When it comes to claims, it takes forever.
Okay, so he was saying that there's a quick payout period, 2 weeks. By 2 weeks, countries should get this money. I'm sure you'll be doing this payout to the companies. Yes. What are you going to put in place to ensure that this is going to be done within the 2 weeks? Because sometimes he was talking about transfer of funds internationally might slow things. But within your own quarters, what are you going to do?
Because you see, as I said, again, I go back to what the aim of what we're trying to do. We're trying to reduce the effects of climate change, of drought on people. If you have too long waiting periods, then people start to die. People start selling their stock in their houses. People start selling the wheat that they have. So the response time, I mean, you know, the primary reason for this is not just to be able to respond, but to respond timeously, right? So we don't have a problem because the markets in which we're insuring, they know and they understand. So we don't have a problem. If there's any delays at all, it's usually because they now get into a country system. But that's also part of what we do before we actually allow countries to actually have write insurance for them. Is we make sure that upfront, there's a plan. There's a contingency plan in place as to if this thing happens and the money comes, how is it going to get down to the people who are the most affected? So I think, you know, based on what we've done historically, I don't think that we've had any delays that anybody has complained about. It's worked as we expected it to work.
Okay.
And we've paid out, probably about 30 million of claims over
$30 million?
3 or 4 years. $30 million of claims. Yeah.
Okay. Anytime, I always take it I'm taking it from the personal insurance angle, so it's easily understood by everyone else. Anytime you insure your car, fire insurance, whatever, you have that comfort, that ease, that, okay, if something happens, something goes bad, yes, we're going to fall on the insurance company. Yes. With a countrywide view, if I was an investor and I was looking at Ghana's, I'll use my country for example, Ghana's agricultural value chain, and I heard ARC was doing this, I'll have some comfort and some ease to pump my money in there, so that I know that if I put money into this farm, for example, and it goes bad, will this have positive long-term effects for investors looking at the African continent?
Okay.
Can we draw that correlation?
You know, I understand. It's not just for just long-term investors. It's also anybody who is in this value chain. So there's two ways you can actually do what we call weather-related insurance or agricultural type insurance. There's two ways you can do it. We can do it at the macro level, which is what we're doing. We're insuring countries, and we're saying, dear Mr. President or Mr. Finance Minister, if you have a situation where there's a drought, right? And we've done the correlation and everything. We've actually done historical analysis. We even did it for Ghana about a year ago when we came here to come and try and explain what this business is all about, or what this, I wouldn't even call it a business, it's a movement is what I'll call it, is all about. We said, over the last 10 years, you had XYZ drought situations, especially in the northern part of the country. And this is how much it cost you, right, to be able to make sure that vulnerable people were taken care of. This is how you responded on a case-by-case basis. However, historically, if you had written a policy with us, for instance, let's say, just give hypothetically, let's say January 1985, and then by December 1985 you had a drought. If you had written the policy with, we actually do the calculations, that the premium would have cost you, let's say, 1 million, and then in effect, your cost of you doing it yourself is going to come out at something like $50 or $60 million. So we've done those numbers, and it shows the value of this. So what we're doing is actually we're doing it at a country level. There are people, and nobody else has done that. There are lots of other people who are doing it more on a, what would I call, a micro level. So they go to a particular area, or they go to particular provinces, or they go to particular farmers, and they can actually do that. So that's happening, and that's happening by various people. So yes, any form of agricultural insurance can only help to promote the uncertainty that in a business like this is not an easy business. This is a long-term business. It's a business that a lot of Africans have been in for a long time, but unfortunately the context is changing. Climate change is changing everything, the patterns that people are used to. So to answer your question simply, even in the US, when people started doing crop insurance about 70 or 80 years ago, the US government was encouraging crop insurance and making it compulsory. So you want to borrow money to do, they'll give you credit to do agriculture, but they'll make you do insurance as well, because they knew that we're guaranteeing some element of food security and building, effectively a viable agro base. So simple answer to your question, yes, insurance, whether it's on the macro level that we're providing to the countries, or whether it's on a micro level, helps to provide more certainty to people as to the outcome in a business which has always had a certain level of risk, but climate change has now thrown in even more uncertainty into this type of business.
Okay, I'd want to zoom in on Ghana, obviously, because it's my home. Mohammed spoke about an internal framework that should be put together,
yes,
and then it's matched to what is at the specialized units level, that's the ARC. So obviously you have a view on, you'd have obviously seen what this internal framework is, because obviously if there's a problem in Ghana and you're asked to disperse some funds, you have to see. Given our context, and not to put you on the spot, are you satisfied with what you've seen with our own?
Yes, absolutely. And you know what, not just do we, we haven't written a policy yet for Ghana, right? So we spend, and what we do in a lot of the countries is, okay, let me back up.
Okay.
Our purpose is not to write insurance. Our purpose is to protect African people.
Okay.
People, vulnerable communities. That's our purpose. Insurance is just a tool that helps us to do that, right? But we say, for instance, if you want to insure your house, right? me as insurer will come and say, the first thing I want to do, you're telling me that your house, you've got contents worth, you know, $500,000 and everything in your house. And I say, okay, the first thing, I'll send somebody, an assessor, to come and look at your house. And if I go to your house and I find that you have some beautiful floor-to-ceiling windows with no burglar proofing, no alarm, no anything, then I'll say to you, look, I'm prepared to insure you, but please put some alarm or put a burglar proofing or something, just to make sure that you are better protected. Right? And that's what the planning framework is. The planning framework is to say, yes, we're going to insure you, but these are the things that you have to do yourself. You have to start looking at how you protect yourself, and not just how you protect yourself. If and when these things happen, and we give you the money, how quickly do you have the resources, the logistics to make sure that it gets down to those people? So that planning process is, you know, so the insurance doesn't just exist in a vacuum. It comes along with that, what we call resilience building, and helping people, you know, get into a culture of risk management. So we spent a lot of time in Ghana. We spent more time in Ghana on that than even just now getting them to come and sign on and be a member.
Okay, and in 2014, we were very well aware of the effects of Ebola. This is something I put to Mohammed, and now we are seeing it again in the DR Congo, and we're hearing that countries along borders of DR Congo are taking steps to mitigate against this. Yeah. I know it's not only focused on natural disasters and weather related. He spoke about outbreaks, epidemics. He said they're even targeting cyclones now, especially along the Mozambican part of the African continent. I would, given the dynamics of how these things happened and the effects it had on the economy, apart from this insurance, or this insurance tool, to borrow your word, that we are using, would that be okay to deal with these things, or there are other things, from just your view on this, from another perspective, that should help mitigate the effects of these outbreaks, epidemics, and natural disasters on the African continent?
So again, I back up. What is insurance? Insurance is just a method of risk management based on having some element of science behind it. And the science behind it is what has happened before, and what is it likely, and what are the possibility of it likely to happen before me, the ultimate insurer, the reinsurer, says, I'm prepared to write this risk and take it on my book. Okay, so you use numbers and everything, or you use models. So as I said, we've used, for us, since most for the drought that we have done, since most agriculture in our part of the world is actually water fed. So we have this Africa risk view. It's a model, and it helps us. Because it not just helps us, it helps us to take it to the people that we want to place the ultimate risk with, the insurer, and say, you know, this thing works, and based on this, write us a policy and tell us what your premium is, which prices the policy. So now, we don't exist in a vacuum as a Africa Risk Capacity Group, right? Whether it's agency or just call it Africa Risk Capacity Group. What we're trying to do is we're saying that, look, we want to move the needle as far as development is concerned by leveraging on people that have the capacity to underwrite this risk. And in doing that as well, what we want to do is to encourage African countries to focus on building their own, as I said, your burglar proofing, to make your house, you know, more resilient. So we want to focus on that. So if our people in Africa are saying that, thank you very much, because, and you will see it, that, you know, drought is not my main issue. So, you know, I come from Nigeria. Nigeria would tell you that our main problem is not so much drought. Our main problem is floods. So the question is then, how do you have a model that can help you, right, actually go into that insurance market and find the capacity for somebody to write it? And the question might be, yes, you say it's rainfall, but most of the problems that we have in most of the coastal cities in Africa is not rain, is actually not rain-fed floods. It's actually floods that come from, you know, we lived in urban areas, so there are congestions and all that kind of stuff. So you have to now start doing the research to find ways that you can model that you can actually sell that risk. So when it comes to outbreak and epidemics, it's key. Ebola came back again, right? It hasn't been as bad because some people had the ability to be able to respond to it with vaccines. And one of our colleagues, the chairman of our agency, she's also the chairman of Global Vaccine Alliance. She says, maybe a lot more people, tens of thousands, would have died if Global Vaccine Alliance had not been able to go there and do some things there. So that's quite key, right? There's cyclone, there's other parts of, there's our Indian Ocean islands have their own issues as well. So what we have to do is beyond being successful with the first products that we have, right? We have to obviously do the planning as well to say that there are other African countries and their priorities are in risks in certain other areas. What can we do to be able to help to provide the leverage of cover as well? So we're fairly advanced. We're only a 5-year-old, group, right? We've been reasonably successful in this one that we have, but we have to have more resources to be and hope to be just as successful in these other areas. So it's only one part of the equation, but it helps. And as I said, it's not just a firefighting post. Something happens, you now get the hoses out, but we're helping people to think about these issues from day one when they write the policy, helping them to hopefully try and prevent them or minimize the situations. And even when it happens, we're helping them to plan and know that, the day your problem occurs, you're able to react immediately, and you're not just trying to think out a solution or think through a solution.
Okay, so my second guest, Dele Babade, he's the board chairman of the African Risk Capacity Insurance Company Limited, part of the African Risk Capacity Group. And we've been talking about the numbers, the pricing of the insurance products with regards to a countrywide view, not insurance product in terms of motor or life, but on a bigger level, and how it's important for the poor people in Africa to benefit from this. Because as you know, we are very vulnerable to the effects of drought, outbreaks, epidemics, and so forth. So he's been taking us to how exactly, adding to what Mr. Mohamed Bienvegui, who is the Director General of the ARC, said earlier on. This is PM Express Business Edition. My name, Philip Nanfuri.